Hi, I'm Chuck Gibson. This is Taking Stock with Art Jarvis, a bi-weekly discussion of what is happening in the economy, the world of finance, and personal investment with Art Jarvis. Taking Stock with Art Jarvis is a presentation of Loveland Beacon in partnership with Jarvis Global Investments, LLC. Now here is Taking Stock. Welcome, Art Jarvis. Taking Stock, episode 36. Kind of a special edition because this is a Friday that we sit and record it because somebody's taken like a 2-week hiatus. Yeah. But anyway, listen, welcome once again for another episode of Taking Stock. How are you, my friend?
Fantastic. Thanks for asking. No, happy to be here, and, if nothing else, we're flexible, so we're good. So, right. We need to do a show on a Friday, we do a show on a Friday.
Well, and we're still at the point on this Friday, I think the 11th of October, that when I return, we will do our next recorded Taking Stock just 1 week before Election Day. Wow, so we're finally going to come to the end of all that, and we'll get a decision. But anyway, we're headed in that direction, and since I'm going to be out of country for a couple of weeks, then here we are on Friday.
Yes.
And it turns out that it's timely because you have some things to talk about. Some reports came out yesterday that are important to our economy. So I'll let you get us started with what's the news.
Where do we start? Let's start with inflation. We talk a lot about inflation. So this week we got the inflation report came out on Wednesday, right? And it came out at 2.3%, if I'm not mistaken. They were looking for 2.2, so it was 0.1%.
Too high.
Well, yeah, I mean, off of where they were hoping it was going to be, or they were expecting it to be. So, of course, the market sells off on that. But, interesting enough, here we are today, Friday, October 11th, and we are now hitting new highs in the market. We are actually above 5,800 now on the S&P 500. So, that's, which is good, which... again, I don't think we're going to get an automatic 20% increase or anything like that. But, with 0.5% lower interest rates, that gives us a little wiggle room. And the earnings numbers are all not looking too darn bad. So, and then, you talk about numbers. And then the other one was, we got the employment number, and they were looking for, whatever it was, 100 and something thousand jobs created, and it ended up being like 245,000 jobs. So, once again, they seem to be struggling with these employment numbers, right? They just can't seem to zero in on, but I'll say it again, as we've said 100 times now, that watch the trend. So, a month or 2 months ago when we were 100, whatever it was, 50,000 jobs too low. Here we are today where also we had 100,000 jobs more than we expected. So that to me is why it's important to kind of smooth that data out a little bit.
Well, and that really lends itself to what you say consistently, which is watch the trends, and not this specific report, this specific number reported. But how does it, what's the explanation? Bad forecasting? And then, I'm such a troublemaker because do we go like conspiracy theorists, and with the political climate that we have currently, do we say, well, they purposely say the jobs is going to be, it's only going to be 100, maybe we're looking for 100, 125,000, and it was 245. We're doing great. Yeah, I mean, so do we go to political? To conspiracy theorists and the political climate, or do we, or is the explanation they just missed? It wasn't.
So here, let me see how I answer that question. Yeah, do I believe that there are opportunities to manipulate things? Yes.
I didn't ask you that question, but yeah, okay.
So are there opportunities? Is that information being manipulated? I have no idea. I'm this little tiny company from Loveland, Ohio, right? So I'm not in the mix, so I don't know what they're making. But I guess I'm going to say it again. The thing is this number's way off. This number's way off to the other side. But guess what? We're still cranking out about 200,000 jobs a month on average. Somewhere. It's kind of like the stock market getting dropping too far, going up too fast. It kind of comes back to what I call normalized, right? I still think it's the same with like employment numbers and things like that. I think if you look at it from a longer term standpoint, I think you get a more reliable number than you get on a monthly basis. Why they can't seem to narrow it down and be, I honestly don't know the answer to that question. I don't know what the process is and why there can be such wide variances on what they're looking for and what we end up with. So.
Well, you started us off on this episode 36 on a Friday.
Yeah.
Well, we're both just trying to get to the weekend.
That's right.
And all the listeners are just trying to get to the weekend.
Yeah.
Covered a lot of things. What was really heavily covered yesterday in the news on economy and things, and that's the thing that hits home. Mm-hmm. And I think that's why the coverage was so heavy on it yesterday. And you just went through a lot of things and a lot of good things and whatever. But the Consumer Price Index, our good old friend CPI, mm-hmm. was not a good report yesterday. And I'm saying, that's the reality. If the Consumer Price Index wasn't where they were hoping, and so that was something of a bad news measure on Thursday, October the 10/10, a bad CPI report. Mm-hmm. But that's hitting home. That's the Consumer Price Index. That's what's hitting our wallet at the grocery store, at whatever goods and services we're purchasing.
Right.
That it's not coming down. It's not maybe even leveling off. I don't know.
No, it's not leveling off. It definitely is not coming down.
Right.
And I wouldn't sit here and look any time in the near future to see anything like that. I mean, there's certain areas that have come down. Like let's get real in the weeds. Eggs went through the roof. Right, eggs are cheaper today than they were a year ago. Right, the price is kind of normalized and things. But you say it wasn't a good report. Well, here's the interesting thing.
I'm parroting the news report.
What they're saying
yesterday, because I don't even know, was it a good report, was it a bad report? I'm just saying yesterday's report said CPI wasn't good.
Yeah.
Anyway,
and it's interesting. You read the headlines, and the headlines make it look like, oh, this is bad. Right. It's like, no, it's not. It's not great. It's not what we were looking for, but it's not bad. Here's the interesting. So we're at 2.3% inflation.
Okay.
Any other year, any other day, we'd be like, okay, that's fine. That's normal.
Thumbs up.
Yeah, we can live with that. That's what we're used to. But the problem still is 2022. We had 9-10% inflation, right? Well, now we're hyper focused on. Whereas we really didn't pay a lot of attention to. I mean, we watched it, but but it wasn't like we talk about inflation almost every single episode.
Seems like it,
right? But we had if we had not had 2022 and did not end up with 9-10% inflation, and we just kind of went through that, and we just kind of stuck with that somewhere between 2 and 3%, 3.5% inflation, we would have to find something else to talk about. Right? It's not. I mean, we care, but it's not glowing dot on the radar screen.
It was not top of mind. It was not primary focus because, inflation numbers were at a level that were, not a concern.
Yeah. Right.
And that's how it was being portrayed when it was 2 point whatever or 3 even at the time when nobody was paying attention. Yeah. But when reports say inflation is rising, and then you're seeing it on the shelf at the grocery store specifically, that's hurting American families.
100%.
So that but you're right. I hear you, and without thinking about it until you said that, that's the truth. If it hadn't climbed like it did, and it climbed fast and furious to the 9 point whatever % inflation rate, in 2022. So now, as you said, we're hyper-focused on inflation, you and I included, during taking stock. So so that's why the headline says the CPI, bad news.
Yeah, bad news. It was 0.1% higher than what we expected. Who cares? But it is what happened in 2022 and what we continue to experience is still slapping us in the face. That's why we're still talking about it. I mean, 100%. We go to the grocery store. We're spending way more money at the grocery store than we were spending 2 years ago. We house insurance, car insurance, property taxes, and
houses and cars.
Yeah, I mean, big. Yeah,
right.
If I had somewhere else to live, I probably should sell my house. To be honest with you, based on the way it's gone up. But
it would be nice to own 2 homes, because then you could sell at this high price and live in the other one that's already paid for.
Customized van down on the river or something. There's always that, but
that's a nightmare.
I can sell grilled cheese out of the side of my van or something. That'd be great. But
that I want to see. I want to see Art and Kim Jarvis in a van down by the river selling grilled cheese. I'll come down and get a grilled cheese.
Well, I'll make a mean grilled cheese. Let's be clear about that. But here's of interest from the report. The one thing that I did take notice of, once again, it's only 1 month, but the two big items that kind of pulled inflation up for the last month was food.
Sure.
And shelter.
Well, that was the cheese and the bread and the butter for your grilled cheese sandwich.
So I might have to raise prices, but so I might have to, and I got to pay the staff more.
And then what you're going to do? You're going to sell the van and buy a big house.
There you go. Yeah.
Anyway,
but that's another conversation. But it's people, we're not dodging what we're spending at the grocery store, right? I mean, you got to eat. I'm pretty sure that if you don't eat, you have a problem.
You can't ignore it.
And you have to do it. That's one thing that's, for most of us, as a common denominator, is you can't avoid that one. Generally, shelter. If we have a house, we're paying for insurance, we're paying whatever. It's hard for the majority of us to avoid that expense. So to me, when you see inflation went up 0.1%, but food cost went up 0.5% in 1 month. That's noticeable. Gas, as always. I'll be cynical. We're getting close to an election, and all of a sudden, gas is down below $3 a gallon again. So now it has a 2 in front of it. There's that. So,
now you're going back to answering that question about manipulation.
Yeah. I'll never give you a direct answer, right? But I mean, But again, I'll say it again. The point is we're at 2.3% inflation. Okay, inflation. The growth of inflation is not my main concern these days. Okay, I'm more concerned with, it's interesting. So we got our 0.5% rate decrease a few weeks ago, right? Well, automatically the discussion was, hey, not only are we going to do 0.5%, which, by the way, all the Fed governors did not agree on,
right?
Okay, and they still don't agree on what the future course should be, which is causing volatility in the markets and things like that. You have 2025, we're going to lower rates another %, and in 2026, we're going to do another quarter. Well, number one, you guys don't have a clue what you're doing for the next 6 months or 12 months. But
well, you have to remind me now, because we talked about this in episode 35, 10 days ago or whatever it was. The next potential rate drop would happen. What are those dates? The rest of this year,
middle of November. I can't remember.
So mid-November.
When 17th.
I had the 14th in mind, but okay. I don't know.
Whatever that was. So 16, 15, 14. The 13th, November 13th.
That's what it was.
That would be Wednesday. Okay. Yeah, that would be Wednesday. So that would be the first opportunity. But it's interesting that we went straight into, number one, they told us what they're going to do next year, and they're going to do, in 2026, which to me is just ridiculous. And then quickly the conversation became, not only that, but we might get a 0.5% decrease in 2024.
Lowering of the
And
rates.
I'm sitting there going, okay, you guys are way ahead of yourselves now. You know, I'll argue with you about whether it should have been a 1/4 point or a 1/2 point to begin with. But this whole, okay, we're going to do another 1/2 point, or we're telling you what we're going to do in 2026. You can't tell me that. You can't tell me with certainty. Interesting now there is a much bigger discussion in the Fed and with the Fed governors and things about, you know, whether there should be any rate decreases in the very near future at all. So we've gone from 1/2 point to, hey, we're going to get another 1/2 point to, maybe we need to take our time, which I tend to agree more.
You must have gotten somebody's ear.
Oh yeah, they called me up and said, "Hey, you know what? I heard an interesting thing you said." No, that doesn't.
Because Art was on the slow. Well, you know, I do send the members of the Fed.
Yeah.
You know, I don't remember what we call that board. You know, that governing board of the Fed. I do send them the direct link. You know, from Taking Stock, so they're hearing it.
Mm-hmm. Yeah, well,
Maybe I just made that up.
You know, I keep getting these phone calls from phone numbers I don't recognize. Maybe that's probably. Maybe I should answer one of those.
Well, you know, if they say, "Hey, I got this recorded podcast called Taking Stock," what can you tell me?
Yeah,
but today, you know, I want before we move on. So my job in you know, working with you, so-called hosting Taking Stock with you, Art, is made easy because I can pretty much, you know, let you talk about the things.
Right.
I mean, I can start every Taking Stock episode with a simple question: what's the economic news? What's the investment news? I mean, there's a couple questions. I don't have to do a lot of homework. I try to do some and be aware of the things that are going on so that we have something of an intelligent conversation, despite the fact that some would claim I'm not intelligent at all. But that, and they might have a good argument, but that's a different story. That's a different story. The point is this: today, in preparing for this, I was thinking, and I thought, you know what? I heard the CPI thing yesterday, so that's easy. We could talk about that. But it's like, okay, well, you know, there's numbers, and there's some general conversation that you'll have during any one of these episodes. They can go back and listen to the 35 previous and hear us talk about things like, you know, it's the trends, you know, and how the numbers are important. But today my thought was, let's get real.
Uh-oh. Jeez. That's asking a lot.
Well, no, and whether you know it or not, that it's what we've been doing, because there was a reason that I said, you know what, the CPI, and they said it was bad news, and the reality is the let's get real of CPI, which you just talked about. We can't avoid it. It's at the grocery store. Yep. And if you have shelter, a home, a roof over your head, you know, you must insure that. You know, you must pay for that. Throw into the mix, you must maintain that, and all of the costs of goods and services to do those things, to keep shelter and to keep nutrition, you know, food on the table, frankly, clothes on your back, those can't be avoided. That's the let's get real of what these numbers are telling us. So if people listening to Taking Stock, we are talking to you and talking with you, and, you know, saying, hey, here are the things that are happening, and maybe offering you an explanation. Art has given good explanations of what's going on with that economy, what's going on with those numbers, what's going on with those trends, and what, you know, why it looks the way it looks in your wallet or your savings account or your investment portfolio, as when we talk about some of the things that are happening in the investment market, which we haven't touched on AI yet today.
Yeah, not yet today. Yeah, I mean, that's, you know, so like we were saying, food and generally fuel.
Sure.
You can't avoid it. I mean, generally, you know, those are, you know, you have to eat. You know, if the refrigerator and pantry is empty at home, well, guess what? I got to go buy some food, right? You know, and I need my job, my life.
There needs to be fuel in your mobile unit to get you to the place where you buy your food.
That's right. Yeah, I mean that. But guess what? I spend a lot of time in the car. You know, I don't pull up to the pump and go, I'm not buying gas today because it's $3. I mean, it's, you know, people are like, you know, people close to me say, well, how much did you pay? And I'm like, I don't know. I don't know what I paid. I didn't. I got to pay what it is, right?
Sure.
But we do have some choices. I mean, there are other things out there that my entertainment, or maybe substitute goods or something like that. Maybe if steak has gone through the roof, guess what? Maybe I'm buying chicken. Right? So, I mean, there's that possibility.
Back to the eggs.
Yeah, so, do I need a new washer and dryer? Well, maybe I put that off. Do I need a new car? Maybe I hang on to my car for a little bit longer. Those are things that, I can adjust for a little bit. But when I see a report that was a little bit higher than expected, and the reason it was higher than expected was not because of consumer goods or something like that. It was because of gasoline and housing costs. Yeah, that's a problem, because guess what? You're generally not going to avoid that, right?
Right.
Or at least most people I know are not going to avoid that. So,
well, you brought up a good point when you see that, like, the CPI was just a little bit higher.
Mm-hmm.
And so, I wasn't paying close enough attention. So do they really break that down and say, well, hey, the reason it was, 0.1 higher than they forecast
mm-hmm.
was because this market, whether it was the housing market or whether it was, the food market or whatever, do they break it down and say, here's.
There's 100 consumer price index indices.
I got it.
So they break it down. They take this out, put this in, take that out, put this in, and that's how, I'm just kind of looking through it, and that's how I know eggs are cheaper today than they were a year ago. And, things like, some of them just break it down by sectors, and other of them get very specific about it, My eggs cost this much, my bread costs this much, my milk costs this much, my gas costs, you can get very... But, yeah, there's 100 CPI indexes out there with different components, so you can look and see. But, once again, number one, the fact that the consumer price index was 0.1% higher last month than what was expected, I could care less. I mean, don't get me wrong. I care, but
I know that was almost an unfeeling remark.
Well, I'm a numbers guy, right? It's if I take my spreadsheet and I plug in 2.3%, I get this result. If I plug in 2.2%, guess what? The result's not that much different.
Right.
Okay.
Right.
Now, what's more important to me as an investment advisor, where I get my most bang for my buck, is where are interest rates. Interest rates are very important, right?
Right.
You can get increased corporate earnings, but it takes a lot of corporate earnings to get the stock market to go up.
Well, and anybody listening, myself included, as we sit here and record these, I know that interest rates are your bailiwick.
Yeah.
I hear you. Mm-hmm. Even today, when we started off with a little bit of a, what's going on with the CPI. That transitioned quickly to talking about the feds and what they did with the interest rate and what they, and I love that, and I hope everybody's listening and understands, the idea of, it's farcical. It is farcical to hear this. They're going, it's going to go a half a point, lowered in 2025, and even, like you said, I mean, I sit and laugh along with you, and people listening. I'm sure they know this. We're not teaching them something when we say that's kind of a joke when nobody knows. Weather forecast. You know what?
Right.
The things they go through to create a weather forecast, and the technology of looking at what's going on with storms, the science of it has gotten much better. So it's not necessarily the greatest analogy, but it's not. Don't tell me it's going to rain on October 25th, and expect me to say, okay, I'm going to book that. We're making no outdoor plans for October 25th.
Good news, huh?
Because today's the 11th, they might know a weather pattern that says, there's a good, there's a chance, and we'll be aware of that. But I'm more interested on the 24th of what you tell me what's going to happen on the 25th.
I mean, you're hitting the nail right on the head. It's like don't tell me what you think is happening a year from now when you're going to struggle telling me what's going to happen 2 months from now. So,
well, and the better analogy, even Art, for me, you and I are both, we both have a kind of a love for sports, and for professional sports, and and probably we're both guilty. I certainly know I am. we watch some of those like pregame shows, or we watch some of the shows during. This football season's a great example because there's 6 days and then a game on Sunday, and for 6 days they're talking about it. Yeah. And we watch and we listen and we hear. I think we watch and we listen with some interest, and it's just ridiculous. They have no idea what happened to reporting. Yeah. The game is happening, and you got the guys that are, if it's on television, telecasting it, or the guys on the radio, and they're broadcasting it, and they're telling us what's happening. They're not predicting it necessarily. They throw that into the game broadcast too. Yep. And then after the game, you can tell me what happened, and that's a fact.
Yeah. Yeah. Well, you can be exactly correct if you know exactly what pitch the pitcher is going to throw every single time, and what the probability of whatever batter happens to be there at the time that's going to be swinging at this.
Forecast.
Too many variables, right?
Forecast.
Yeah, when you have that many variables, and that brings up an interesting point. If you look at the last week or two, so we've had, in 3 weeks we've had 2 hurricanes. Right, we've had 2, and then all the uncertainty and things like that. We spent the majority of the week where this hurricane was going to run right over the top of Tampa, right, and it was going to be bad, right. This
Correct.
is going to be the worst one. There's some calculation like the barometric pressure dropped down to 800 and something, and
right.
it was nearing the mathematical minimum for that, which I need to do some more reading on because I was like, I didn't know it existed. And then guess what? Last second, Milton took a little bit of a right-hand turn. All we did talk about for a week how Tampa's going to get pounded, and then guess what? All of a sudden, it decided to take a little bit of a turn, right? So even then, you can't report that. But so you had hurricanes, you have what's going on in Lebanon and Iran and Israel with Hamas and all that. So add some, Iran launching missiles at Israel is not a good thing. Okay, that's an escalation. Okay, so you got to watch that, and we got to watch about oil and things. Yeah. Interest rates, because of everything that's going on and the discussion going on in the Fed that might not be as aggressive with lowering interest rates and things. That has taken the 10-year Treasury bill or note interest rate up above 4% for the first time in months. So now you got this going on and that going on. You got higher interest rates, and then whatever else they're throwing at you. There's been a whole lot of talking about variables. There's been a lot of variables here lately. But guess what? In spite of all this negativity and all these things that happen, guess what? We sit here today at 5,800 and something on the S&P 500. That is a new high. That's the first time we've been in the 5,800s, right?
Right.
In spite of all this. And there's always this saying that the market climbs a wall of worry. Okay? But if you I'll say again, if I sit here and look at the economic numbers, do I fully expect the market to jump up 20% in the next 12 months? Most certainly not. But all things remaining equal today, I don't see a good reason for the market to drop 10 or 20% either, right? So I think the big wild card, and the best thing that can happen is 1 month from now, the election will hopefully be over.
Amen.
Take that uncertainty out of the equation. So wherever it ends up coming out, whoever is the new person that's going to be in office, all this prognosticating and all this drama and all this uncertainty that goes along with it, hopefully all that will be gone. We'll have an answer to the question, and let's move on to the next thing. So there you go.
Right.
I'll climb down off my soapbox now.
Well, I'm glad you got back to, because I had all but given up hope that we would touch on the S&P 500 at 5,800 again. Mm-hmm. So does Art Jarvis want to make a revision that, with basically 2 months remaining in 2024, what's the S&P 500 going to reach?
Good question. It's I'm comfortable with where it is right now, but the problem is now we're into market psychology and all that kind of thing. We could easily be sitting here a few weeks from now talking about S&P at 6,000.
Okay.
Yeah, easily. I mean, again, if it's not going to go down, then it's probably going to work its way up. If it's not going to work its way up, it's probably going to work its way down a little bit. We're just, again, the reason I hesitated to answer your question is
well, it's what we were just talking about. You can't really say.
Yeah, I mean, honestly, 6,000 was the number for next year.
I hear you.
So
we're a year ahead.
But are we at 5,800 because people still believe the fact that we're going to get some major rating decreases? Is that why because if that's why we're at 5,800, that's not a good reason to be at 5,800.
Well, then it's going to drop.
Right, but will it drop back down to 5,400? Yeah, maybe.
There's a lot of variables.
That's the problem. Well, which is why. Well, this is why I like this game so much. It's a great big puzzle. I always say it's a big puzzle. You're constantly trying to put the puzzle together, and once you think you almost got the puzzle put together, someone comes along and scrambles it for you. Right?
Well, we're going to talk about the new pieces of the puzzle, where they fit in, and how we put it all together on October 29th. Tuesday, October 29th, you and I will sit down for Taking Stock 37. But that does it for Taking Stock, episode number 36. Art, thank you so much.
No, thank you. Appreciate it, and best of luck to you.
Appreciate that. So, we're like I said, going to be out of country. I'm going to, you don't necessarily agree that I'm going to enjoy some peace and quiet away from the all the campaign stuff. We'll see. No. But either way, when I come back, we will get together on Tuesday, October 29th, 1 week before Election Day, and we'll put the puzzle pieces together once again on Taking Stock.
Yep. Yeah, that's exactly right. Put the puzzle pieces together and see if anybody wants to scramble one more time before the election. So, yeah.
Well, I'll say it again one more time. Thank you for joining us. And to the listeners, thank you for joining us for another episode of Taking Stock. That'll do it for now. Yeah. Talk to you on October 29th.
Thank you very much.
Thanks for joining us for this edition of Taking Stock with Art Jarvis. Join us again in 2 weeks for our next edition. Taking Stock with Art Jarvis is a presentation of Loveland Beacon in partnership with Jarvis Global Investments, LLC. Jarvis Global Investments, LLC is a registered investment advisory firm. The advisor is not attempting to furnish personalized investment advice or services during this production. Individuals should fully investigate the appropriateness of any investment before investing. Past performance is no guarantee of future results. Investments may lose value.